Hello everyone, I'm Corey Mitchin with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of July 22nd. Each week I go through the same process, deciding how aggressive I want to be by looking at several different indicators. And so conditions are good. It's kind of interesting. We kind of had some choppy trading where the indices were going up, but a lot of stocks were not acting as well. And then now we have the indicators in good mode, but the indices have been declining. So let's, take a look at that. We'll look at the indicators in just a little bit. But, last week was when the indicators started to look better. And then we had this week, which was pretty much kind of a sell-off week for the most part. And, that's okay. I had some setups I was looking at for stocks, but ultimately they started declining, and so nothing ended up setting up. Still, now watching for potential setups, and this pullback could potentially help with some setups possibly forming. And if the indices just keep falling, then we won't have any setups. That's what I like about kind of all the patterns I trade require this move up before I enter, and so if prices just keep dropping, we don't get triggered in. So let's look at the indices. We have the NASDAQ 100, the S&P 500, NYSE Composite, and the Russell 2000, each kind of looking at a different segment of the market. And all are in uptrends, but all are currently in a pullback. That's not necessarily anything good or bad. It just indicates, we're in a pullback. Pullbacks within uptrends present opportunities. So we'll be watching for that. We do have a little bit more of a sell-off in NASDAQ, getting close to that prior swing low, but nothing I'd be super concerned about just yet. But if we start really selling off, like I said, obviously, then that generally tends to ruin setups in individual stocks, and we'd be out for a little bit longer. Canadian index, same thing, strong move up, a little bit of a pullback. Bitcoin, this is a daily chart, but it's zoomed in a little bit more just so we can see the overall, not the overall uptrend, but at least kind of the uptrend so far this year. And we've had a couple periods like this of about 20 to 25% pullbacks. This one I just drew a box around kind of the main section of it, but these 20% pullbacks are pretty common. So we had this first one, a move back up to the highs, a little false breakout below the low. So I had sold off most of my position as we started selling off after not being able to climb above that high, and then re-entered again as we started moving back up after this false breakout low. So I do like the chart still for a potential move up to these highs. Again, if it were to stall out near those highs, might take some off, but I do like still, we are still in an overall uptrend. This chart doesn't capture the whole trend that we've had since start of 2023. But ideally I think it's a low risk, or was a low risk entry. It's getting not as low risk anymore, because now if we enter up here, stop loss is down here. That's much bigger than if we enter down here and have a stop loss there. And then for the potential breakout, or even if we got out near the highs, that's still a decent trade. But it's really, if we get that next breakout, potentially the 100K mark looks pretty interesting. Gold, this is the gold chart. This is the gold miners. Still very whipsaw-y. It's, there's some decent setups kind of in some individual stocks, but it's been, really whipsaw-y for the gold miners and gold overall. I'm not in any rush to get into any of these trades. It's kind of a bit of a bullish segment, but it's not my favorite. So talking about that here, it's not as high on my list of things to get into, but if I happen to see a nice setup, the overall trajectory is up still, so not horrible. Let's look at the market health indicators. This tells us sort of what's going on underneath the hood, things that just looking at the indices may not tell us. And volume, not really important to me at this point. This is daily percentage movement of the S&P 500. And really what I'm just watching for is big selling coming in. So that's 2% down days or higher. We had some red days here recently, but not really close to the minus 2% on the day. And when we get 2% selling, that just tends to be a strong indication of, some really strong selling coming into the market, and usually tells me to step aside for a little bit just to see what happens. So then I'm not taking any new trades after that happens. We have not had any of those in a long time. What does that tell us? It means it's still bull market behavior. Bull market behaviors are characterized by lower volatility, generally low daily movement. We don't see the big daily sell-offs, and big daily sell-offs are more associated with downtrending and bear markets, or even really choppy markets, things I want to avoid. So pretty much this whole time, through this whole rally, even through this little bit bigger decline here, we stayed in bull market mode. So that's just something we can kind of watch. It helps us see, we're pulling back now, but the pullback so far is orderly. What does that tell us? Well, if we look at this and it's an orderly pullback, that tells us that it's likely to be just a pullback. We're not seeing the big selling coming in. So then it's more likely to just be a pullback in what ultimately ends up the uptrend continuing. But if we start to get those big downside days, that tells us things could get a little bit uglier. This is the NYSE advanced decline line. Advancing stocks minus declining stocks is a cumulative number, and it gives us a bit of insight. We can see here, even while the S&P 500 was going up here, a lot of stocks were not. And then more recently, we've had more stocks advancing, and that's kind of clear from, you look at the NYSE composite, you look at the Russell 2000, big indexes, including lots of stocks, and, they started rallying, toward that start of July. And we're already seeing some evidence of that on the advanced decline line. Then once we get to July, we see it a little more clearly that more stocks advancing. This is upside volume versus total volume. It just tells us whether there's extremely high amount of volume coming to stocks moving up. That's the wrong way to describe it. What this indicator measures is how much of the volume occurred in stocks moving to the upside or to the downside. So if it's a 90% reading, which would be this upper black line, that means 90% of the volume that occurred that day occurred in stocks moving higher. A very strong bullish signal. And if this number were to be way down here at 10%, that means only 10% of the volume that occurred that day occurred in stocks moving higher. A very bearish signal, showing almost all the volume was in stocks moving down, and that's something to be a little more wary of. Could indicate, the potential start of moves, but those 90% downside days generally occur near tops or as the index is declining. We haven't had either in a long time. You can see we're between this lower black line and between this upper black line. This lower black line, not as important. That's kind of a special situation. But really want to see near this upper black line or this lower, and you can see for a long time we've just been in the middle. So we really want to see those extreme values for that indicator. This one is telling us how many stocks are above their 50-day moving average. You can see about 64% of stocks in the S&P 500 are above their 50-day moving average, and about 63% of all U.S. stocks are above their 50-day moving average. The 50-day, just a very crude measure of stocks in uptrends. I generally find it much easier to make money when this indicator is above 50 or, moving up through it. And, over here we had the indices moving up, but most stocks were not really in uptrends. They were either flatlining or you had some moving up, but also just as many moving down. So it's more of kind of a coin flip whether you'll be able to make some money or not. Whereas when we're trading during these periods, much more is moving up. So it's like kind of even if you just picked a random stock, it makes it easier to make money. Not that I suggest just picking random stocks. So that's the market health indicators. Really, I like to calibrate my trading to how I'm doing. If I've And even just what I'm seeing on the charts, if I'm seeing lots of, quality patterns occurring when I run scans, or even just when I'm kind of looking through watch lists. I publish several watch lists. And depending on how those stocks are doing, that kind of helps me calibrate as well. Like if things are breaking out and really running, that tells me, hey, like I want to be involved. If I'm seeing a lot of like breakouts that just kind of stall and then reverse hard back to the downside, that tells me, yeah, conditions might be okay, but trades aren't really working. So I'm going to keep my money in my pocket. Sectors. This is what the sectors have looked like recently. And real estate and financial still holding up well over the last week. They have been the best performers over the last month, and they're also up there over the last 3 months. Technology, kind of one of those honorable mentions for sure. It's been fantastic performing, but not so much recently. Sold off the hardest last week, moved it down over the last month to one of the worst performers. But that's kind of one of those ones, like it's been really strong and now it's really weak. You sometimes get the bounce back. So technology is one to keep on the radar simply because it tends to move a lot. People have asked about, we do have these periods where there's sometimes not a lot of trading opportunities just based on the general market conditions. And people have asked, like, how can I be more active? And this is sometimes, well, actually always, why I recommend people do their own research and think about how they want to trade as opposed to like just trying to like mimic what I'm doing or something. Because like, for instance, my case, I'm in a situation where I don't need to trade every day or all the time. But some people are maybe transitioning from a different career and trying to make trading full-time, or they need to generate a lot of income from their trading. Then you may need to find, because you're in a different situation, you may need to find ways to to make some extra money. So there are a lot of these periods where overall market conditions are good and I decide to totally stay out. But what you can do is, if you do want to be a little bit more active, is there's usually certain industries. So even while I've been out for a while simply because, some of these indicators were not so good during this period, the indices were moving up, which tells us there were some stocks, generally, larger, bigger cap stocks, which help drag up these indices. So there were stocks that were doing well. What you can do is, sometimes the sectors are a little too broad. What you can do is look at industries, and I've talked about this, basically a subtext to a lot of these weekly market analyses, is that I kind of say, well, I'm not taking swing trades, but then I'm looking at gold separately, and there's good periods and there's not so good periods, and so I'm looking at it kind of as like saying, hey, there's overall market conditions are good, so maybe be a little cautious with your swing trading, but hey, there's this one thing over here which is doing pretty good, check that out. Or Bitcoin, things like that. So if I'm talking about Bitcoin and I like the trading opportunities that are happening in it, even though market conditions may not be great for swing trading stocks in general, there are these pockets where it's like, hey, check out Bitcoin, check out the Bitcoin miners, check out some Bitcoin ETFs. Gold had a really hot period there. Check out gold. So there's these like pockets that you can invest in, even when market conditions aren't so good. So there's these kind of opportunities. Sometimes they all dry up and nothing's really good, especially if you're long side only. If you're willing to go short, there's almost always something that's either really moving up or really dropping, so we can find the opportunities. If you followed these market analyses for a long time, there's been periods where we've been looking at oil and gas stocks because maybe the market's in the moving down, but oil and gas stocks are like really strong. I forget, during like COVID or something like that was the case. And no, the market was strong during COVID. But yeah, in the last couple of years, I remember there was one time we focused on oil and gas stocks, and that was kind of where I had my gold charts now. That was we were kind of checking out oil and gas a little bit. So it was a strong pocket while everything else was kind of week, or at least, that was somewhere we could focus. So you can check out individual industries and possibly trade these hot sectors even when, I'm saying market conditions aren't great, because the conditions in that particular industry, in those particular stocks, may still be of interest. What I would say, though, is that anytime you have a flat stock market or a declining stock market, and by stock market I mean the indices, and then you have a hot sector that's storming higher, I like to think of it as you're kind of on borrowed time, right? Because something's got to give there eventually. Most stocks do follow the market long term, and so if you have a declining stock market or even a flat stock market and stocks that are really rallying, either the stock market's got to start going up, or eventually that hot sector is going to get dragged down. Because when everything else is losing money, or you can't make money anywhere else, eventually people start taking profits in that thing that is working good, and it gets overhyped and it comes down as well. So I think of it as like borrowed time. Oftentimes when the market starts crashing, you might still have a sector that holds up really well. Sometimes it's oil and gas. You'll have a strong bull market, and then at the end of that bull market, some of the commodities still continue to do well while the market starts tanking. And there was articles on this on the website when it occurred. And I was just saying, like, hey, pay attention. We are on borrowed time here. Something's got to give eventually. So you can trade those hot sectors while they're hot, but I tend to favor more using like a trailing stop loss or something like that, because if the indices aren't as good and you have that hot market, it's only going to be hot for so long before it gives way as well. So just consider that. Also consider how much capital you're willing to deploy in those situations of that one hot market. For some of you, you may be willing to be very aggressive with that hot market while it's hot. For others of you, you may say like, yeah, we're kind of on borrowed time. I'm going to be a little bit more cautious. That's totally up to you. I mean, you can decide how you want to calibrate your risk, and you should sit down and really think about how much risk are you willing to take. And of course you have your stop losses and all that, so risk is controlled, but if you ended up taking 5 positions and you lost on all of them and you deployed all your capital, would you be okay with that? You can see how various industries have been performing on FinViz. So this is a little FinViz chart, and let's just go to it here. So finviz.com, and then if you go to groups, you get the sector, and if you go here, you go to industry. And one day I wouldn't care about too much unless you're a really short-term trader. But you can look at, what's kind of hot over the last week, and you can look at what's hot over the last month, or really weak if you wanted to potentially look at some short trades, and short-term short trades when we're looking at some of these time frames, or the last 3 months. And what you can do is you can click on, just to get kind of a brief snapshot of what things are looking like. So let's say you wanted to look at broadcasting, one of the top performers of last month. You click on it, and FinViz will pull up all the charts of that industry. And you can look, and it's like, whoa, these were really weak, but they're having a recent bounce. And it's like, okay, are these the type of trades I want to be in? Maybe they fit the patterns you trade, maybe they don't. So you can, just kind of get a real quick look. What about residential construction? It kind of looks like, some breakouts out of some triangle formations, and it's like, okay, are any of these setting up for potential trades you'd like? So it's a quick way to just get a snapshot of, where you might be able to find some opportunities. And, you don't always have to just look at the top ones, because sometimes they're the ones that have just spiked. And if you're not the type of person that buys after a spike, I'm more of what I'd call like a pullback trader, or I wait for things to kind of settle down a little bit. Maybe you find your kind of sweet spot, maybe, in these kind of things. Or you look at maybe things that have performed really well over the last month or last 3 months, but maybe are just down a little bit on the 1 week or something. So they've been strong over the last month, but a little bit weaker over the last week or 2 weeks. And that might be your sweet spot. So you can kind of, find, this is just a different way to kind of look for some trading opportunities and potentially make yourself a little bit more active during times when conditions are not so good, or when conditions are good but you're not really finding a lot of opportunities. Maybe we need to zoom in a little bit and find some of the stocks that have been working or could potentially start working very soon. So overall, some interesting market conditions out there recently. Hopefully that helps you with kind of those quieter periods, helping maybe looking at some of those industries, a little bit of insight on that as well. Have a great trading week out there.